with Leslie Owosso. Leslie is a former CRNA who went from $200,000 in debt to building a $217 million real estate empire through multifamily investing. As the co-founder of Excite Capital, he has helped over 300 investors generate millions in returns while continuing their careers. Without further ado, welcome to the show, Leslie.
Oh man, Eric, thank you so much for having me. Thank you.
Yeah, well, we're glad to have you. I'm actually excited to have you on. You've got tons and tons of experience. You've done a lot of things, and you're also helping so many people as we speak. You've got investors that are active within the real estate space that you're showing how to raise capital, how to buy properties, how to syndicate, and so you're doing a great service and helping a lot of people along the way. And so I'm really excited about the interview and just learning a little bit more about you and also this $200,000 deficit that you were able to overcome. And so I'm looking forward to that. But before we get into those parts of the conversation, I'd love for you to just share a little bit more about yourself and also how you got started in real estate.
Oh man, perfect. Thank you again so much, Eric, for having me on your platform. So again, my name is Leslie Owosso. I used to be a CRNA, like a nurse anesthetist. I was a CRNA for 10 years, practicing in the hospital. Really great job, providing a ton of value to people, helping a lot of lives, saving a lot of lives. But that constant grind of exchanging time for money and spending all this time in the hospital and missing out on a significant portion of my kid's life, kind of took a toll on me. So at some point, I started doing research on what else I could do that could help me create passive income that doesn't require me to be able to be present and exchange my time for it. So that's when I came across real estate investing. That was back in 2017. So I started investing in real estate, single family real estate using the BRRR model. That worked out really well for me, really enjoyed the process. Then along the way, as I did more research and started to learn, I met my partners, Dr. Julius Oni and Tenny Tolofari, and we decided to partner up and scale the real estate operations to focus on multifamily acquisitions because we realized that acquiring apartment buildings will give us the ability to not just create passive income for ourselves, but to create passive income for many other busy professionals that are looking to invest in real estate, but do not necessarily have the time to spend looking for properties and managing the assets. So the possibility of creating a platform where they could put their hard-earned income to work for them while they maintain their careers and create passive income over time that could get them to retire from their 9 to 5 or create another source of income that is enough for them to choose to do whatever they want to do with their time was really, really, really motivating to us. So we created Excite Capital in 2019, and we've been off to the races ever since, working seriously hard every single day. And today we are proud to say that we've helped right now, over 400 investors invest in this asset and acquired over $217 million of assets in the last 6 years.
Yeah, that's really impressive. So 2017, you got started within the BRRRR method, and then from there you transitioned into the multifamily space. 2019 was a really good time to get in. The interest rates were extremely low, and it was just a great opportunity with the market continuing to accelerate and continuing to climb in value. And so I'm sure you guys did do very well. So if I could, let's go back some. You mentioned that you were a CRNA, and you were trading a lot of time for money. And so what was that like? You started your business in 2019. How were you leveraging both? How were you able to operate your W-2 at a high level and build such a successful real estate business?
These are some great questions, Eric. So, at my job, I always say if I had to have a job, I will have a job as a CRNA. It's a great job to have. The hours are not as bad as many of the other high-paying jobs in healthcare. The quality of life is great. I did spend 12 hours in the hospital, but that was a lot of times because I used to work extremely hard. I wanted to pick up all the other extra hours. And it's a nice, challenging job. You get to provide a ton of value to a lot of people. I get to manage people under crisis, get to manage critical situations and manage it really well. So I enjoy the job part of it. But what I started to notice is like I was missing like a good portion of my kid's life, which is something that is important to me. So that's why I started looking at other avenues to create wealth. And the other thing too that got me to start thinking about looking in the other direction is because once you get into nursing, for example, the highest level of nursing that is considered is being like a nurse anesthetist, which is a CRNA. So when I got there, it felt like my growth had ceiling. There's a ceiling to my growth, and that thought of just staying there for the rest of my life didn't make any sense. So I had to look for something else that pushes me to continue to grow where the growth never stopped. And that's why real estate made sense to me because I understood it from the numbers perspective. And that's why I got into real estate. The beginning was not necessarily easy trying to juggle the real estate vision and the W-2 at the same time. And I was never one of those that just worked 40 hours a week. I was one of those that did 60 hours a week. I would spend a lot of time in the hospital. And to be honest, when I look back to when I started to now, I never really sat down and said, you know what, I'm going to structure like 5 hours a day for real estate and 8 hours a day for work. I just knew that I had a passion for real estate. I had a passion for building this business. I had a lot of people that I wanted to serve. And I just went out there and started doing the work anytime that I got, right? I would be working 12-hour shifts in the hospital. And during one of my breaks, or I have a break in between cases, I'll be reading a book in real estate, right? I might be working a night shift in the hospital, which is a call shift, and it's not busy. While my colleagues are watching Netflix, I'm learning how to underwrite. So every little gap time that I had during my career as a CRNA, I was using it to invest in myself, to study real estate. On the weekends, I would be going to seminars, going to networking events. At night, when I leave work, I'll go spend an hour at a networking event before I go home and go to sleep. So that's just it. I just had this whatever it takes attitude. It doesn't matter what it takes, whatever it takes, I'm going to figure this out. And then just like that, and it's funny because when you do that, it seems like life kind of opens up and gives you those spaces for you to be able to do that. So I found myself every single day being able to spend 2 to 3 hours working on a real estate business. And then as time went on, that time even expanded to more. And then as the business grew, I started scaling back on the number of hours that I worked in the hospital and started being able to balance that immediately. But in the beginning, it was just whatever it takes. And then I just go out there and figure it out.
Yeah, so I think that everyone's story is pretty much the same thing, especially when you work W-2 income. When you have a 9 to 5 job, you're getting things done whenever you can in order to stay on top of all the different opportunities that's out there and the different tasks that you have to complete within your business. So, um, that's amazing. I love the part where you mentioned that while your colleagues were watching Netflix with their downtime, you were putting in the work, you were studying, you were putting in the effort at learning underwriting, learning the business process. And that's very similar to myself because there's been times in which there's been a lot of downtime within my W-2, and I still have W-2 until this day. And a lot of my coworkers, they would just be scrolling through Facebook, and I'll be studying a book. I'll be listening to a podcast. I'll be taking advantage of that free time to be able to capitalize on learning, getting more educated within the business. And so I think that's what you have to do, especially at us 9 to 5ers or individuals that's got a main source of income outside of real estate in the beginning. So that brings to mind the question. So you're full time in real estate currently, is that correct? Or are you
Yeah, yes.
okay? All right. So was there a roadmap? Did you have some type of deadline or did you create some plan in which you knew that you would exit your W-2 in a certain amount of time? Or did you even think about when you would exit your W-2?
Yes, I did. I created a vision, and my vision was to exit. When I started in 2019, the vision was to exit my W-2 in 2023. But I didn't. Things didn't go as planned in 2023. I didn't exit my W-2. I had scaled back to working just per diem and spending a lot more time in less time in the hospital and more on the business. Because if you know anything that happened in like 2022 in our space, the market really slowed down with the interest rate hikes that happened. So the market really slowed down and there were not a lot of transactions happening. So I stayed at my job. I ended up not leaving. But then in 2024, I was able to leave because I found myself spending a lot more time working on the real estate. And things kind of aligned for me to leave at that period of time. So I had the plan, I had the vision. This is when I want to leave. And in your mind, you think this is what is going to get for you to get there. But for the most part, when I left, I had done all of the things that I wanted to do so that I positioned myself to be able to sustain not having a W-2 income anymore. But it was probably it's probably the toughest decision I've ever made because as an anesthesia provider, you earn a lot of money. And like I said, it's not a lot of tedious work, although you have to exchange your time for money. It's a lot of mental tediousness that goes with it. It's a great job to have. And over the last 2, 3 years, it's been like some of the best years for a career as a CRNA. So I had to walk away from all of that to focus in on the real estate. So it wasn't an easy decision to make, but it was a great decision. It was the right decision to make because what I'm doing now, I'm able to impact a whole lot more people and able to provide a ton of value to a lot of people.
Yeah, so I think it's smart to look ahead and see exactly where your passion lies. And I'm sure you were passionate about being a CRNA, but you are able to impact so many other people through the real estate journey. And from the outside looking in, I'm sure there's been quite a few people that heard about you quitting and just can't quite comprehend the fact that you would leave such a great job behind. But you've got a plan and you're passionate about what it is that you're doing. So congratulations on all the success. If we could, let's bring things to more current events. You mentioned earlier about the 2022 interest rate hikes that the Fed began to introduce into the market. How did that affect you guys, and how did you all pivot, or did you guys pivot during that period of time?
So it seriously slowed down our transaction volume. We came into 2022. Actually, 2022 was probably one of our best years in the business. We exited a deal, we acquired 3 deals, and everything was going really well. And we three of those, 2 of those 3 deals were acquired. We're assuming fixed interest rate loans, so stable loan, no debt risk. And we exited out the deal and did really, really well. So we came into 2023 like very, very strong as a company, and we came out being very aggressive on our growth. But the market has shifted at that point in time with the rapid rise in interest rates. The pricing of multifamily assets and the interest rates were not matching. So while we put in a lot of effort, we actually doubled down on our efforts on building an investor database. We doubled down on our effort on building an acquisition side of our business. We reviewed from 2022 until April of 2023. We reviewed over 2,325 deals.
Wow.
2,325 deals that we reviewed at that point in time, but nothing penciled. But we kept working. In that same period of time, we increased our investor database from about 2,500 to about 4,000, right, by April 2023. So we were out there educating, and going out there underwriting deals and never stopped working during that period of time. But although we were doing that, we're not getting the results that we wanted, which is like closing deals. It wasn't until April of 2024 that we were finally able to put a deal on the contract, and the deal that we just closed last week. So again, so that is significantly slowed down the transaction volume in the market, which affected our business adversely, but we never stopped working. And that has always been our philosophy. When everybody is slowing down, that's when we play pickup. That's when we catch up. That's when we double down. When everybody was afraid, and a lot of people were saying, "Hey, we're just going to take a break, stay on the sidelines." We're still new, relatively new in the business, so we're hungry. So we cannot be approaching the business like the guys that have been in the business for 20, 30 years. So that was our philosophy. And we went down and kept working and kept working and kept working, and we've never stopped.
Yeah, so I think a lot of people got their foot in the door during that period of time because I joined the syndication arena back in December of 21. And when I first got in, there was so much capital flooding the market. There were so many people throwing significant amounts of capital at deals that I just couldn't even get a conversation with a broker because they already had their guys. They already had their A groups that they would shop their deals to initially. But once the Fed began to increase the rates, that gave me opportunity to begin holding conversation with brokers and get that cut through that I couldn't get initially when the market was saturated. And so I think that's a great strategy to keep your foot on the gas, even if you're not closing on deals, to get and build relationships with other investors and brokers along the way. That way you can leverage that downtime that a lot of guys were sitting on the sidelines on. You guys were actually able to build some relationships and build your database and also build your um, business in the process. So that's really good, Leslie. So if we could, let's chat about one of your recent transactions. I'm always trying to get better as a operator myself, as a real estate investor, and those that listen to the show, they're trying to get better as well. And so we like to hear how other investors are doing deals, how they're locating deals, how they're funding deals, etc. So if you could share with us a recent transaction that you've been a part of.
Absolutely. We just closed on our most recent deal, Grove Park View. This is a 268 unit deal that we acquired in Gwinnett County, Georgia. It's a Class B asset, value at play. We've been working at this deal for a while. It took us about 8 months to close the deal, just because of the markets that we're in with capital raising being challenging. But it's a great asset, really, really nice asset in a great location. We got this asset via through one of our broker relationships. This is a broker relationship that I've been working on for the last 5 years. So they were able to present us, trust us on this one. And then we went in, faced some challenges along the way, but we were able to fully execute and close on the deal last week. So really, really proud of this asset and really, really proud of our investors that are getting in on this asset. So it's our best one yet.
Okay, and so you mentioned that it took 8 months to be able to close on this specific property. What was the huge challenge, if you don't mind me asking?
The biggest challenge was capital raising, right? We took this deal under contract in July of 2024, right in the middle of election cycle. And that was probably one of the most challenging times to raise capital because there was so much negativity in the marketplace from both sides. Nobody knew what was going to happen. Everybody was focused on the news. So even some of our traditional investors were like, I'm just going to sit on the sidelines and wait and see what was happening. And that was something that was not unique to us, right? It was actually very rampant in the marketplace. A lot of deals were falling apart. Most of the transactions were being done by institutional investors. Those were the guys that were coming in and scooping these assets at a discount. So we were grateful that we had this asset under contract. When we came out, we made a lot of progress up front, then things kind of slowed down. But thankfully, the seller of the asset understood the marketplace that we're in, so they continuously work with us, and we're able to extend and extend and put in some more EMD funds, and finally we're able to close the deal at the end.
Okay, and so what do you credit that relationship with that seller or the seller being open to work with you guys for such a prolonged time? What do you credit that towards?
Transparency.
Okay,
Like
nice.
if I could credit it to one word, is transparency, and that's exactly what the seller told us at the end. The seller is an institutional buyer, is an institutional investor. The company has been in the space for 43 years, and that's the feedback we got at the end. They said they really, really appreciate our honesty and transparency because at every point in the transaction, we were explaining exactly what was going on. And I'm grateful for that because that's one of our core values, honesty and integrity is something that we hold as standard that we hold ourselves by. And in that same period of time, we were also communicating heavily with our investors, giving them clear updates of what was going on. And the seller understands the market. She understood what period of the market cycle that we're in. So that level of communication and interaction that helped the transaction at the end actually happen more smoothly. And at the end, we became like really, really good. That also helped us foster a great relationship with this institutional investor as well.
Okay, and as far as debt, what type of debt product did you guys use?
So we assumed a fixed debt. It's a Fannie Mae loan at a 4.74% interest rate.
Nice, nice. How many years was left on the loan?
5 years.
Oh, sweet, sweet. That's great. Okay, and how about did you guys partner with any capital raisers, or how did you guys execute that raise? It sounds like it was a challenge, and you mentioned that it was a challenge. How did you guys finally pull it off?
So we partnered. So we mentor others. We mentor other 9 to 5 professionals that are looking to start their business. So one of our star mentees, we actually partnered with her on this deal, and she's not just raising capital; she's also coming in on the back end, participating on the asset management because that's our philosophy. We mentor people that could take part in all of that. So she worked heavily in the capital raising as well. Then Excite Capital took the lead on raising the capital as well. And then we brought in other partners that being after being in the business for 6 years, we've built some great relationship with other investors that bring in larger check investments. So after things had settled down with the elections, we started seeing some of those investors coming back into the deal and facilitating the close.
Yeah, and so that's where those relationships come in handy. Starting relationships, holding conversations with people at events, and as you go throughout your day, those relationships they show up at great and critical times at both. And so that's good for you guys. You were able to get it to the finish line. It was a challenge, but you guys were so well established, you were able to pull it off and get it executed. So Leslie, let's move a little bit further into the show. We've got a portion of the show that we like to call our Moonlight Coaching Round. And typically, what we do is ask our guests a few questions. If you could hold your response between 1 to 2 minutes per question, that'd be great.
Perfect.
The first question I have for you is, what do you think every new real estate investor should know before investing in real estate syndications?
They should know the fundamentals and know the numbers, right? Before you invest in real estate syndications, at least know the fundamentals. Don't be too focused on the returns. Understand how to pick markets to invest in. Understand the different business plans when it comes to investing and which one really aligns with your investment goals. And then you understand on what kind of numbers and how what those numbers mean and how those numbers are projected. Because anybody can come up with all the right numbers. Like in the 2021s, 2022s, I saw all kinds of crazy deals that were being advertised with all kinds of numbers. So it doesn't take that much to spend a little bit of time to educate yourself. But once you do, go out there and invest because syndications provide a great way for you to grow wealth passively.
Yeah. Next question is, if a person was new to real estate and wanted to start buying real estate on the side of their job or either their main business, what advice would you give them?
Tell them to go for it. Like take the leap, jump in and invest. Just start by educating yourself. Start by investing in yourself first. Get a basic education and understand what role you want to play in the real estate space. Do you want to be active or you want to be passive? And if you want to be active, go out there, take a leap, buy a property, and learn from the experience. And align yourself with the right mentor. Get a mentor that is doing it, and that is willing to teach and that will continue to do it for the next few years because that's going to save you a lot of time and a lot of money.
Yeah, that's a great answer. Knowing what you know now, what kind of advice would you give a person attempting to get where you are within their real estate journey about balancing business and life?
There's no such thing as balance. That's my philosophy, right? When you start off your business, you're gonna have a very imbalanced life. That's the only way you grow. Like there's no such thing as balance. Just get it out of your head that you're gonna balance anything. If you want to grow your business, you're gonna have to put in a lot more time into it so that it grows. Just think about yourself when you were in school, if you before you became a doctor or CRNA or whatever your career path is, how balanced was your life then? You spent a lot of time on the education so you could able to get that right now. And that exists in everything that you do in life. So get the whole idea of balance out of your head and know that you're building something that will take you far and you need to put in some time into it. So just put in the work, it's worth it.
Yeah. So initially, when you're starting anything, it's going to be a challenge to get it off the ground. And so you're going to have to learn the process, get the foundation laid, and then you could begin to build. And so I'm with you on that. It's going to be tough to have perfect balance in the beginning, but over time, you can stabilize just like a property, a value add property, and things can get a lot more smoother. So great answer. The next question I have for you is, if a person had no money or experience, but they wanted to start and scale a business like yours, what would you recommend for them to do?
I'll say just start by educating yourself. Like get align yourself with other people that are doing it, and you could take action and still be able to get in the business. Learn a skill. Like find a skill that today YouTube, everything is free. There's a lot of information out there. ChatGPT, all these tools are available to you. Find a skill that aligns with something that you enjoy doing it and learn it, and then go and find a community of other people that are doing what you want to do, and then use your skill as a way to get it. In today's day and age, it's so much easier to be able to do these things than the past generation. So just find a skill, focusing on it and learn it. I know people that have become GPs or owners of multifamily asset by just learning how to underwrite properties. So you can do that too, and you can give a lot of value to other operators and become partners with them.
Leslie, the final question I have for you is what are the best reasons to invest in real estate as a passive investor?
Well, I'll say it's probably one of the best passive investments assets over there because you're investing in a tangible asset that caters to a core human need. And when you invest in markets that continue to grow, you're investing in an asset that is going to continue to grow. And for syndications, for example, multifamily syndications, you're investing in a business, not just an asset. It's a business that is valued according to the income that it creates. And if you know anything about the US, you know that in most markets, over time, rent will always go up. So that income will always increase. So you're investing in a tangible asset that provides you passive income. And most important of all, too, it provides you with some tax benefits. So you're not only making money, but saving money on taxes as well. So those are the kind of investments that you want to diversify into, investments that produce income for you and also save you some of the income that you already create.
Yeah, real estate, it offers so many different benefits. Unlike just placing your capital into a savings account and allowing it to capture interest, you're able to get tax benefits, passive income, and then also proceeds on the end when we go to sell a property or asset. So great answers to each one of those questions, Leslie. Before we let you go, could you share a great personal development book or either a great business book with the Moonlight audience?
Uh, yes, I'll say one that I just read recently is the 5 Second Rule by Mel Robbins. This is a perfect book for all of you that are stuck in analysis paralysis and good at procrastinating. It's a really good book, and it's a good rule that if you apply, it's going to completely change your life. Because I read it at this stage of my growth, and I still use it every single day. It's a very, very simple concept, but it could definitely change your life. So I'll say 5 Second Rule by Mel Robbins.
Yeah, so I started off using it pretty heavy after I read it initially, but I've somewhat sloughed off. But yeah, it is a great read, and she's got some really good principles in there. Hey, Leslie, we want to thank you for coming on the show. You supplied us with some really great information, sharing your start, how you were a CRNA initially and making really good money, but wanted to go after your passion in real estate and was able to successfully exit your W 2. If someone listening wanted to reach out to you and connect, what would be the best way to do so?
Well, I'm available on all social media platforms. The name is the same, Leslie Owosso. I'm on LinkedIn, Facebook, Instagram. Just search LESLIEAWASOM. And reach out to me, send me a DM or whatever, and I'll be able to touch base with you. Or you could also, and if you are serious about learning, you want to be part of a community that will help you grow as well, you could come join our private exclusive growth community called the Beyond 9 to 5 Club. That's beyond, then the number 9, TO5, club.com. We are there. We provide a ton of education to members of our community. So it's a great place to be where you can learn and grow and also learn a lot of great things about real estate.
Yeah, I was really impressed when I saw that Facebook group that you had a community that served individuals that had 9 to 5 or W 2 income. And so, yeah, that's a great service that you guys are offering. Leslie, once again, thanks for coming on to the show. We'd love to have you back anytime.
All right. Thank you so much for having me, Eric.